Lululemon stock price is down 50% off its high in 2024, and some investors are asking, is that a buying opportunity? I think so. I think it is. Lululemon's growth rate has decelerated considerably, and that has investors concerned. And it's a valid concern. But at these lower valuations, I think Lululemon stock is a buy. I'm going to go through all the reasons why I think that's the case, including the company's longer run revenue growth rates, its operating profit margin, and how it compares to industry leader Nike, as well as its cash flow from operations. Furthermore, I'll look at its valuation and what investors expect from Lululemon over the next 5 years to round up my justification for why I think Lululemon is an excellent growth stock to buy today.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
As I discussed earlier, Lululemon's growth rate has slowed down considerably in the last 3 years. As of its latest quarter, revenue growth slowed to just 10.4%. That's down from close to 30% earlier in 2023. Now, of course, those comparisons in 2023 and 2022 are difficult because the consumer was more robust in those years. Remember, in response to the pandemic, governments worldwide provided thousands of dollars of stimulus to consumers. And so people had a lot more money to spend. Also, a lot of places were closed for people to spend money on. You couldn't go to restaurants. You couldn't travel. You couldn't go to concerts. You couldn't go to ball games. There were so many restrictions. And so people had more money and less places to spend that money. Lululemon was one place people could still spend money, and so they did. And Lululemon's growth rate accelerated following an initial drop-off during the pandemic. So in recent quarters, you're comparing with those times in earlier 2021, 2022, and 2023 when consumers were in better position to buy Lululemon's products. And so it's understandable that its revenue growth rate would slow down. You're seeing similar trends from competitors. You're seeing Nike struggle, and it's more of a macroeconomic trend rather than a company-specific factor. Longer term, I think Lululemon's growth catalysts are still in place. It's growing internationally. It's still primarily for females, and it's still trying to penetrate the male market. And that's another opportunity if it can expand into, that will create another growth driver. Furthermore, Lululemon's pricier products is more for the higher end consumer, which is doing much better than the lower end consumer, which is feeling a lot of pressure from higher prices on everything from fuel to housing to transportation. And so that's the reasons why I think Lululemon's growth rate will continue. Even if it slows, I think Lululemon has growth drivers. Even if it grows at double digits for the next several years on the top line, I think it would make an excellent investment longer term, especially because Lululemon's profitability is excellent. You look at its operating profit margin in a trailing 12-month period, and I have this metric going all the way back a decade, and Lululemon has been above 16% for the entire decade, and it's rising as well. 22.78% is the highest its operating profit margin has been in the last decade, and it's almost twice the level Nike is at in Nike's latest 12-month period. So it's dominating a player like Nike at its own game. And that just goes to show how effective Lululemon is at serving its consumers. It's a similar story when we look at cash flow from operations to sales. Lululemon at 24.2% and increasing is much better than Nike at 14.46%. And more importantly, you look back at 2019 where Lululemon was only at 14%. That's risen all the way up to 24%. I love to see companies expanding margins as revenue grows. That demonstrates to me there are economies of scale built in. It demonstrates to me the company is getting better at what it does, getting better at knowing their customer, knowing what product to offer and when and where, and that increases your profitability and it makes for a better investment for shareholders. Looking ahead over the next 5 years, the analysts on Wall Street that are following Lululemon stock think it's going to increase its earnings per share by just 11.5% over the next 5 years. Now, that would be a big drop off from where Lululemon was in the previous 5 years, where it increased its earnings per share by 38.5% over the previous 5 years. Now, I don't think it's going to grow at 38.5% over the next 5 years, but I also don't think it's going to grow at just 11.5% EPS over the next 5 years. I think Lululemon will be closer to 15 to 20% on the bottom line over the next 5 years, somewhere between where it was in the previous 5 years and what Wall Street analysts are expecting over the next 5 years. One of the more important metrics I look at when I'm following a company is the return on invested capital. This measures how good a company is at taking investor money, turning it into products and services that generate profits. Lululemon at 41.98% is a very good number on this metric, and it's been increasing almost double where it was a decade ago at just 21%. What's more, it's well ahead of Nike, which is at 24.69%. This further demonstrates Lululemon's ability to compete in a competitive industry against an industry leader that has decades of relationships with consumers. Lululemon has demonstrated this over a decade, and so investors can feel reasonably confident that it will continue prudently managing money over the next 5 years and next 10 years. And investors don't have to worry about any debt with Lululemon. In fact, it has an excellent balance sheet with $1.9 billion in cash and zero debt. That means if the company faces any slowdown in revenue or profitability, it can weather such a storm because the balance sheet is excellent. And having zero debt on your balance sheet with $2 billion in cash gives you flexibility to capitalize on growth opportunities. You have the capital and you have the borrowing capability in case an opportunity comes up that you feel like is a no-brainer and you can jump on it. You have the capability to do so because you have the money, and you can borrow more money if you need to because your balance sheet is excellent with a business foundation with strong profit margins and excellent growth over the long term. And finally, because of that slowdown in stock price, because of that 50% drop off in stock price, Lululemon stock is trading at the cheapest valuation it's been going all the way back to 2021. Lululemon is trading at a forward price to earnings of just 16.68, the lowest it's been going all the way back to 2021. Now, as I highlighted in the beginning of the video, it should be trading at a lower price today than it was last year when it was growing at 30% on the top line. It should be trading at a lower valuation. But I feel the decrease in valuation is overdone. In fact, to start the year in 2024, Lululemon was trading at a forward PE over 30, and it's more than halved to 16.68. Again, the lowest level it's been going all the way back. So I think at current valuations, Lululemon is an excellent growth stock for long-term investors to consider adding to their portfolios today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.